High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. MasterTheMarkets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, welcome to the live trading workshop. So in today's session, we're going to be covering, as our usual format, we're going to be taking a look at some trades that are setting up at the moment. So we got actually cable and gold that I am looking at, okay? So I'm going to be taking a look at these live trades, potential trades that are setting up over here. So if I bring that up over here, and also we're going to be covering one topic like we always do, okay? So those are the things that we are going to be doing. So let me just bring this up very quickly. I'll just show you what I am looking at. The thing with TradingView is it sometimes runs. Okay, so there we go. So we got this one here. So we got the cable on the 1 hour and the 15-minute, which is what I'm seeing a potential on this. So we'll cover some live trades and potential trades that's setting up. I'm also taking a look at gold as well at the moment as well. So I will take a look at that too along with you guys. So on GBP and gold. And then if there's any good really potential trades, we will take them live. And also another thing, we'll be doing all of this in person, in live in London, in the Grand Connaught Room. So if you guys are in the UK, if you're nearby, please do come in. Me and Gavin will be trading live over there. The second thing also, we'll be covering our topic for today, which is going to be quantitative versus subjective trading. I know that's quite a popular one, which people usually ask us. And then finally, then we will take some questions and Q&A, and then we will be also updating you on some events that are coming up also. This and more in this session. Traders, welcome to our live trading workshop. It's Stu Narpan here, founder of MasterTheMarkets, Trades Conference, and the Traders Open Day. So without further ado, so let me now see the positions that I'm looking at. Let me just see. This one is saying start webinar. Okay, let me just try to click on that. That's fine. Okay, good. So now let me bring up GBP USD. I can probably shuffle through the screens if I use the MT4 platform. Let me see, and then we will we'll shuttle through both. So as most of you know, traders, so we look at the trend alignment first. Yesterday when I was doing a one-to-one coaching session on the S&P mini futures, I did the same thing, and then the client saw the trade hit the target in real time. So the combination that we got over here is very systematic, very logical, and you can take away and you can do it yourself, okay, as well. The combination of price and volume. And the volume has been given by Trade Guider and the team over there, headed by Gavin Holmes and his team, which is really solid amount of work, which was done by Tom Williams right from the beginning, okay? Good. So on this, let me tell you how to actually we do the trend alignment and everything. So what we actually do, traders, is that we take a look from the daily time frame to the 4 hour to the 1 hour and then to the 15-minute, okay? So what we do is we align all of them together. So on the daily, you can see over here is that this is an uptrend at the moment, right? And let me just take a look at this. This one did confirm on this broker data over here on uptrend phase 2. So this is what I have updated here. Interesting enough, on this broker data, we don't have a top confirmation. So this is an uptrend phase 1, okay? But for now, I'll just use the MT4 data for now, okay? That's what I'll do. So on the 4 hour, if I go back to here, then I can see that this is also a uptrend phase. Actually, as of now, just as we started, you see this confirmation just came in, okay? So now that is an uptrend phase 1, okay? Because why phase 1? Because it's in alignment with the trend, okay? So that's why we are saying that. Those of you who want to go and look into all of that, look into 7 steps of CTP, I'll talk about more of that. But I will give you the reference ones later, because right now I just want to quickly go through the trades and see any trade calls at the moment that we can get, okay? And then the 1 hour at the moment, you can see over here, right? So the 1 hour at the moment, let me do that very quickly. Let me see. Okay, so the 1 hour here, right? The 1 hour here, as we can see, right? It did do a little bit of a downside before yesterday, but today it has taken out both levels and taken out that critical level where it turned it to an uptrend, right? A reversal or change in market behavior, where some people might be calling that, or a trend change. And then therefore we got an uptrend phase 1. Why uptrend phase 1? Because this is a bottom to top move and it's in alignment with the trend. Okay, so that's what we call an uptrend phase 1. Okay, this is why we got all the tops and bottoms quantified. So this is what we call a quantitative framework, which is what I'm going to be covering later on today on the topic on quantitative versus subjective. Okay, right. So that's what we got over here. So we got an uptrend phase 1. So I have put that there. And then on the 15-minute, it looks like it's the same thing again. On the 15-minute is what I am looking for a trade on here. Okay, so what we are looking for is uptrend phase 1, as you can see over here. Okay, that's what I am taking a look at on an uptrend phase 1. All right, let me quickly jump down to the 5-minute. Don't think this is going to confirm. So maybe if we want to squeeze in a trade, we can go to the 5-minute. And there we go. So if I get my bottom confirmed here, I can start to think of taking a trade on this. Okay, that's what we want to do. All right. Okay, good. So I will keep an eye on that one there. Now, on the 1 hour, the stretch. So we look at the stretch as well. I mean, like any other strategy, we look at a confluence of factors. When they all come together, then we got a higher probability trade coming up. Okay. So over here on the stretch principle, I've talked a lot about this on our YouTube channel. I'll give you the references very shortly. On the stretch, let me go on to the 1 hour very quickly here. On the 1 hour, you can see this red line here, the green line there. That's your stretch, which is taken off the daily time frame. Then we can see that it did take out the lower one first and then went to the upper side. Okay, so it took out both, but the most recent one was on the upper side. Okay, so that's what we need to just mention over here. Over here, this is what I've said. Okay, so the bias actually is towards the upside today. What I'm looking to find is that to form the bias where the BRO is going to form. So the bigger range today is going to be to the upside. And then also our range hasn't formed for today yet. Okay, so this one will be towards the upside. Okay, so that's what I will say towards, this is towards the long, isn't it? Let me just copy it just from here. And we'll do the same exercise for gold, okay? So, and then any other questions, you guys can always type it into there. Let me just come out of here. GBP USD. So that's that one there. So now that I got my bias and everything, I'll also check the volume very quickly just to see that if it's confirming on my side. The 4 hour confirmed again over here, as you can see. And the 4 hour, you can see that there's a gray dot here by the VSA line, which is good, which is telling you it might be changing in our favor. And the 1 hour, the volume side of things is also telling us it's a green side. Okay, price is quite strong above it with the volume combination. And also it's signaling towards the upside. We can also see some volume spikes which has crossed above the third moving average. All this is done by Trade Guider team, Gavin Holmes who leads it, and which was started by Tom Williams, okay, the late Tom Williams. Really great personality and great person who shared a lot of the amazing truth in the markets, what happens and the principles behind it. And then we got the 15-minute. If I go down a bit more deeper, you can see again, it's still above the green side. I don't think we're going to get a top confirmation. If we do get that's brilliant, then we can take another trade. For those of you, I know you did send me email before the show started, the webinar, that some of you had seen a signal here where on the 15-minute where everything aligned, which is very good for you guys. You took it on the close and you just did a 1 ATR number, okay? 1 ATR number from here was just or 9 pips as I saw, okay? So that it just did that just on that red bar. So if you see over here, it just did that 9, okay? So for that swing, we've got our money in the bank. We realized it, got out. But then now if you want to take another trade, what you need to wait for is another swing to confirm with a top and another blue dot to come, okay? According to this framework and which all these OE tables support us, okay? With the numbers, all right? So that's on GBUSD. So the volume is supporting that as well. I'll just quickly take a look at the 5-minute also. And I can see that on the 5-minute, it has dropped a little bit here above this small support over there. But the volume is spiking definitely above the second and edging towards the third. So what we really need to look for is at least a cross above that level. But if I do get a blue dot, I think we will go in with a small ATR target, okay? Let me just get the ATR number and then we can put it across the screens basically. I will just prepare this at the moment because I don't think we're going to get a 15-minute top. And I'll do the same analysis on the gold as well. I'll keep this on the other screen just to keep an eye on this. Okay. And I'll put the ATR on here. There we go. And then we'll see how that turns out to be. Good. So the ATR at the moment is just about 5, isn't it? Over here on the 5-minute, let me quickly just take a look at that. A bit more exact, that's about 5 as well. Okay. So wherever it confirms, I will add another 5 pips on there. Okay. So that's what I will do. Right, traders. So if it confirms 129.47, isn't it? Is what we are looking for. Okay, I'll leave it at 129.50 for now. I'll change this to green. But remember one thing, right? I just want to make this very clear. The thing is, we don't enter this, so we got to hold on, right? Sit on our hands until we get a blue dot appearing, okay, on the 5-minute time frame. This is a small short trade on the 5-minute. Usually we prefer to take it on a 15-minute. The reason why I dropped it down is because on the 15-minute, it looks like the strength is quite strong for this to confirm this top. So highly probably this will carry on further, okay? So this is why we look at the lower time frame, all right? So I'll put this 5-minute here and I will keep an eye on this on the other screen as well. Okay, so let's see, 5-minute, it should be closing. Let's see. There we go. That's still no blue dot there. So we will wait for another 5 minutes to go by. In the time being, what I will do is I will take a look at gold for now. Okay, so let's take a look at gold now. So we got this on the 5-minute on the watch out. So we got gold. Now on gold, the good thing is on the daily time frame, that's a very clear uptrend phase one, strong bull run. We did take this in the elite trading room as well. We did catch a nice part of this move. We exited around here for the last interruption low that it did take us out on. So on here, okay, where you got very near to its 20% OE target. So this is more swing trading, more end of day. So it's a few more days that we hold on to the trade. Okay, it suits more 9 to 5 and business owners. Now on this, at the moment for today, on the intraday, the objective will change. So on today, what you can see is this bar here at the moment, right? So if I take a look on the ATR range, that's about $36. But this one, we usually look at what 80% of the $36 to form. So that should be about 32, isn't it? So it hasn't formed. You see, look at the bar range, which was done by one of our clients as well. A lot of the things that you see over here was done by our clients. Even in fact, all the trading view, all the the SMI programming and all that was done by one of our clients. And I know other clients who hear this are very impressed by this because the community itself uplifts the community, you know. So if you go back to here again, you can see that the range has not been done. So I'll just update this very quickly here. Just keeping a look on the 5 minute as well on the GBP USD. Doing a bit of multitasking here, but we'll get through it. As traders, you got to learn how to do that. And the range hasn't been done. Okay, so on the 4 hour, let me just do it on here. It's more quicker, isn't it? On the 4 hour, you can see that's an uptrend phase two at the moment, right? We got a confirmation there. So I will do uptrend phase two. And then on the 1 hour, let me see here. On the 1 hour, there isn't actually no trend. All right, there's no trend over here. NA, right? So it's an SMC. So I'll just put it as SMC. Is it SMC or EMC? Let me see. So this was a higher low. There's a lower high. Yes, so that's actually is an extended market compression. So that's EMC. It's compressing further. So the burst out will be quite large. So 15-minute, if I drop that down further, let me see what's going on. And the stretch is to the upside. So the 15-minute is also in an EMC as well. So you're going to be cautious of this one because it's not showing a strong trend yet. Okay, so this one is on the upside, which what I can see. Let me just borrow this from here. On this one, correct. So I'll go for 1 ATR. What's my bias? Now, this sounds interesting, isn't it, traders? Because if you take a look, it's not really correlating at the moment. Uptrend on the higher time frames, but then on the lower time frames, then I'm getting a compression. So on this one here, whenever you get that, whenever you're not very clear, I would say stay out of it. But if you do want to take a trade, we take it at a lower risk, okay, based on the higher time frames. All right. The only thing that is going for us here, it's on the upper stretch over here, which then it can form its BRO to the upside. So this wouldn't be one of my best candidates. I will still stick to GBP USD for now. Let's see how that performs. If it does confirm in about 1 minute, then if it does, then I will give you the trade details for trade order details for GBP USD. Okay, long. So we got entry. Let's see what this one does. This one is on the close 12944, isn't it? So we're going to be quick on this one. 12944. If it confirms, so I'm not sure. So stop loss is for the low of this bar, 129.33. Yep, we got a confirmation. We can go for this. 12944. So 129.34. So I've entered this on a fixed lot size, 129.33. Now I'm just punching in all the stop loss and the target. And then this, we're just going for a very small target of 5 pips, as I said, 12949. Okay, 1.2949. So that's the trade order details. Hopefully the boys can put that in over there. So 12944. So let me just put this in here. Let me do it representatively so that you guys can see that. And then 12933 is what I got. And then from 2944, what we do then is we add another 5 pips on top. Okay, so 12949, which is what I've done here. Okay, 12949. Okay, what gives me the conviction here is because of this table here, which tells me that it will get to its 180R level 61% of the time. Okay, and for phase ones, usually it will be much higher probability. Okay, you can add another 10%. We're getting the phase one tables out very soon. So we'll monitor this and see how this carries on to be in terms of this trade. The other thing is, so I've put it all on here. So 129, yes, we got everything here. So this is all fine. Yes, one more thing I can take a look at. If I want to put my stop loss a bit more tighter on this, let me see what I'm getting. Then we can get it smaller. Actually, we can put it in here. That's the last interruption, wasn't it? Let's see how that one turns out to be. Yep, that's crunched it now. So 98% number I go for, which is 280R. So I won't get stopped out 98% of the time if I put it at 280R. So 280R would be 10 pips, right? So 10 pips from 2944 be 2934. So just a little bit better, but we can look for this also for last one. But usually for 5-minute time frame, I prefer to put it a bit further because of the noise. Okay, so we can put the stop loss at, let me see, the close 2945, 29, 2940, 2940, 2934 we can do because at 10 pips, isn't it? So those of you who haven't entered it yet, so this has dropped down a little bit, so you can put a pending order as well. You can do that, that's no problem. So for those of you who want a little bit more tighter stop loss, you can do this one here. Okay, 2934. Okay, 2949. Brilliant. Okay, this is good. Remember, I've shown you all this before as well. You know, when the trade goes against you, when you know your numbers to your side, and you know that 98% of the time it can't stop you out, then you hold the trade with conviction. This is what we call the volatility or the dance before it gets to our 5 pip target. Okay, we'll see how this goes, but do remember that sometimes there's a 1% chance that it will hit your stop, and then of course then it's a numbers game. Okay, that's how trading goes, isn't it? For those of you who haven't entered into this, you can definitely look into entering that. Okay, so I'll give you all a few minutes before we go on to the topic. Now, the other thing that you guys, I know a lot of you are asking questions on, okay, where do I find out about this? Is a bit over my head and everything. So for those of you who want to take a look at all these live trades and everything that we are doing, go to youtube.com/masterthemarkets. Okay, so that's where it is, and then click on the subscribe button. But the important thing is that when you click on the subscribe button, a lot of people tell us that, you know, Thiru, whenever you go live, you're not getting the notifications, and why is that? And the reason for that is if you see this drop down arrow over here, what you do is you click on that drop down arrow, okay, and you click on the all bell icon. And you click on the all bell icon, anytime we upload a video or we go live, you will get that notification straight to your phone or to your email if you have done it in such a way, okay, right? So that all will be sent to you. Now, under the live section is where you can see all the live trades that we have taken and all in our YouTube live and everything. See, currently we're going live over here, which is what you can see. And then the other ones, you can see also as well. Now, in some of the trades, you will see that on DAX, when we took a trade on DAX, it went against us quite aggressively, but then we held on to it and then it bounced back up again. Because why? Because we know the numbers of the volatility. The most important thing for you to gain your confidence in this trading is to know your numbers, especially in the volatility, because that's what makes people fearful and panicky, isn't it? Is it going to go up? Is it going to continue or not? For example, over here, the question really is, it's gone against me. Is it going to go further towards my stop loss, or is it going to turn around and hit my target? Okay, how much volatility should I give it room for? And that's what this one question answers the question for us. Okay, and over many years, all right, of data, because it's pulling it from here, from over 15 years. Okay, that's what it's pulling it from on the 5-minute time frame. This is what gives us the conviction, and also the trend alignment tables which I've given to you, plus the stretch and with volume. So you see a lot of confluence of factors, and that's what we have done over here. Now the other thing also, to understand the table what I'm showing you on the MAE and the OE and all of that, go on to 7 steps to CTP. So this is one of the best ones. So this is over 15 years of collated research. Really will help you in whichever type of strategy that you may have. Okay, so over here, once you put your contact details and everything, then when you click on the green button, click on I'm not a robot, and after that, you can get the videos, which will look something like this, which is the 7 videos over here. Okay, great. So now that I've mentioned all that to you, so now let's move on to go over here. What I want to cover now is the topic, right? The topic for today. Now, the topic is quantitative versus subjective, okay? Just in about 3 minutes, the US Open is going to happen as well. We'll see how that carries on to be. Okay, good. So quantitative versus subjective. Now, quantitative means what? As you already seen already over here, that this is a quantitative framework. What do I mean by that? What does that mean? Some people ask us. Quantitative means, right, it is in a classroom of 1,000 people or 10,000 people or 1 million people. If I teach this, everybody will say the same answer. It's like 1 plus 1. You teach them 1 plus 1 is equal to 2. Everybody will say that, right? 5 times 5, 25. All this is all called quantitative. Okay. Subjective is where, it goes with the flow, or maybe it goes with your discretion, basically, right? So for example, if you say, I'm going to cross the road when there is lesser cars, okay, so that's a bit subjective, because lesser can be maybe 2 cars for someone, or lesser could be 5 cars for someone. So it's not quantitative, is not clear, right? Or if you tell somebody that you've got to run to lose weight, and now that's a bit subjective, because somebody can say, what, let me run just 200 meters, that'll be enough for me to lose weight. Somebody might say, no, I need to run 2 kilometers every day to lose weight, right? So that's when you're getting quantitative. Okay, and a good fitness instructor will be able to tell you that. Same thing in the markets. So if I say that, okay, so when does it become subjective? Okay, in terms of trend and everything, most people will make something quantitative, right, rather than making it subjective. So for example, if I hide this SMI right now, right, this smart money indicator, then what happens is that over here on the 1 hour time frame, it becomes a bit subjective at the moment, because some people might say, oh, this is already in a downtrend. Some people might not even think about, looking at cycles to even define a trend. Some people might say, oh no, this last 2 bars are down, so it's a downtrend, or these 2 bars are up, it's an uptrend. So the whole class that you're speaking to will get different answers. Some people might say that, what, I think that's a bottom. No, this is not a bottom. Some people say, no, I don't think that's a bottom. This is a bottom, and that's how you quantify it. And that's why I think that this is maybe in a downtrend. Some people might say it's not. So you get the picture. So when you don't have any quantification, it becomes very subjective. It becomes very subjective. Okay, that's what it is. And then when I do my trend alignment tables, I can't do this with confidence. I can't get anything quantitative. Okay, that's the whole. Hopefully you're getting the difference. There's no such thing as right or wrong. We're going to come to that in a minute. But that's the difference between quantitative and subjective. Once I put it here, there's no question. So everybody in the classroom now, according to these formulas, now the formulas doesn't mean it's a holy grail or whatever. These formulas was given to us by the quant traders back in the 1960s. I'm not saying this is a holy grail, but it gives us a framework. Now with the framework, you can see that every time there's a blue arrow of a blue dot, that's a bottom. Everybody in the classroom can see that. Orange arrow of orange dot, that's a top. With that, then I can decipher what trend it is based on cyclical movement, which is the nature of market movement. So the way the quant traders designed this was very methodological and logical. Okay, so it was very, very strong and systematic. Okay, and all to answer the question of how much move is left. Okay, so that's how they answered this entire thing. All right. So that is the thing on quantitative versus subjective. All right, quantitative versus subjective on what it means, right? Now, why should we know about this? Because from here, then you can start to formulate your strategies. So do you want to be a bit more subjective? Subjective usually in trading would include maybe news and fundamentals, looking at the news, reading in between the lines if you want to, especially, one of the big market traders, Bill Lipschitz, he looks at the fundamentals, especially for currencies, because he believes that a lot of it is ruled by the government interest rates, the interbank transfers and all of that. So he reads into all that very carefully because he totally believes that the fundamentals is what moves the markets, especially in the currency market. So if you do that, then it becomes subjective. You must know, right, how to read the news and then make your bias. It's not quantitative like this, where on a spreadsheet we get all the quantitative data onto it. Okay, so that's the one. So now, however, on a quantitative basis, if you say, you know what, I don't want to guesswork this, I just want to have the validative way of looking at it, then you can then start to form the framework, the trend, the phases, use this data, use the statistical thing, numbers to help you formulate your strategies. Okay, so that's why it's clear to understand whether you want to be a quantitative or a subjective trader. Now, how do you use all of this, which is the final thing I want to tell you, is the way we use it here in Master the Markets is in a quantitative way. Is how we do it is we first quantify what the bottom and the top is, right? We first quantify what the bottom and the top is. Once we have quantified that, then what we then do, we get 4 data points. Okay, now the 4 data points, the first one being the trend and the phase. Okay, so at the moment here, there's no trend. Okay, there's no trend at all because, as I said, it's making a lower high, a higher low and a lower high. So that is no trend at the moment. Okay, so that's an extended market compression because it's done that 2 times consecutively. And the phase also, there's no phase because there's no trend. Okay, now on number 2 over here, the second data point that you get also is the open equity data. The open equity data over here. The open equity data is what I showed you just now. How much swing move is there out there? Okay, it measures the swing distance, which helps you define how much move is left once a bottom is confirmed. Okay, so that's what this will tell you, the OE data, right? So it measures for each swing distance. All right, so that's what it does. Then the next thing is the MAE data. So the OE data you can see over here. In this swing over there, it did 3.65 ATR on gold on the 1 hour time frame. We can do this on any time frame. Okay, that's the OE data, and then it will put it all onto here. Then I can get my target points according to my strategy construction. This is why I say definitely look at 7 steps to CTP. We'll talk all about this in much more detail. I'm just a bit rushing through here. And the MAE data, it will also tell you about how much move does it go against you, okay, which is how we place the stop loss order here on the cable over here, right? Which is what we did over here. That's how we placed it over here, okay? So that's on cable, on the MAE data. Then the next thing then over here is, then we take a look at time to. How long does it take to get to your target? So these are the 4 data points once you're quantitative, okay? And you can trade because, as you saw just now, traders, when I take a look at the GBP USD, when I place my stop loss there to get to the target, if I know that 98% of the time I won't hit my stop, then I can place that with conviction and I can stick through this dance and volatility, which is what you are seeing over here, okay? Which is what you're seeing over here. Of course, in anything, especially in trading, you need a big P word, right? Patience. You need the patience, you need to hold through it. But to hold through it, you need conviction, because without the conviction, without the stats validation, then you might get panicky, that you might go to my stop loss, or this move is over, it went straight against me, forget this, I can't be bothered anymore, right? But when you trade with all these stats and conviction and validation, it gives you a bit more conviction, okay? That's all it does. And on top of that, we add a few more parameters, which is what we have done over here. On the trend alignment tables, we look at the stretch principle, then we look at the volume as well, we look at the ATR range, and then we do it. When we put it all together, then it becomes a stronger, higher reliability trade. A lot of our clients were doing this, they're given video testimonials to us as well. They're really doing very well once they understand it, because it's so systematic, so logical, okay, that you can apply. And not only is rigid, you can apply it to any kind of strategy. So before I digress a bit more, so that is the advantage of the quantitative thing, okay? Doesn't mean it's the end all and be all. That's how you can apply the quantitative there, especially the SMI framework with the BSA as well. Now the subjective, you can see that over here, volume is a bit subjective. It's not very quantitative. It doesn't mean that every time it spikes up, then you can take a trade. No, right? So this is why the over here at MasterTheMarkets, we combine with Trade Guider, because on the SMI, it's more quantitative. Especially people will say, oh, I don't know where exactly to enter, Tiru and Gavin, how. And the SMI helps with that. And then subjective is the volume. And that's also powerful, because when you combine both the quantitative and the subjective with the volume, SMI and the VSA, then you get high probability setups. That's how we've done it. In fact, in any profession, you get to the top of your career when you develop your skill as well as your intuition. Your skill is more quantitative, which you keep repeatedly doing, your habits, plus your intuition develops over time. It doesn't come overnight, like what Warren Buffett has mentioned before, which we mentioned in the Make It Happen section in Traders Basecamp as well. It happens over time. The gut instinct develops over time, the intuition. Okay, that's how the quantitative and subjective can go hand in hand together. Okay, right. So that's what I've covered so far over here. So in terms of, so what have we covered so far? So we've covered um, in terms of the quantitative versus quantitative versus subjective, we covered the what are they first, right? Then we covered on why should you learn both of them, and why should you be adopted to either one of them. It depends also on your personality and how you want to construct your strategies. And the third thing is, how can you apply it? Where we went through the SMI on the 4 quantitative points it gives you, and also the VSC as well principles. Okay, right. That's good. If you got any questions on that, please do punch it in. Let's see how our trade is doing. So far, so good. In real time, we can see it's slowly edging towards its target after this volatility. And as Stuart, my US client, will call it the dance, okay, of the market. But the good part is, with this framework, again, which is quantitative, you can see that this dance that it did here, but it never confirmed its stop. An orange arrow never popped up. If the orange arrow never pops up, the race isn't finished yet, right? So I do not need to come out of this, okay? Either I come out of this when the race is finished with an orange arrow and an orange dot, because then that swing has finished, right? It's the nature of cyclical movement. And the other thing is where all the target is reached. Now, what we can do now, traders, is what we will do is, because it has cleared the stops and taken out this high, we will now trail our stop loss. Okay, we'll trail our stop loss to this last low where the interruption was. Let me give you the exact number, right? And the low here is 129.38. 129.37 is where I will trail the stop loss to 129. 37. Okay, so we'll leave that how on. So trailing stop to 129.37. Okay, looks like we're not having an easy run for today. We'll wait and see how that goes. On the 15-minute, let me check. It's still oscillating around, right? And the top is not confirmed. This is why we dropped onto the 5-minute, okay, time frame. Okay, we'll wait and see how this goes. We'll keep an eye on this particular trade, and we will update you on how it goes, and you guys can keep an eye as well, okay? Now, in terms of the other ones, the last thing what I did want to mention, I know some of you had asked me some questions also about Tesla. What's going on with Tesla? You know, some people are saying it will bounce up, the stocks and all that. I did do a video on this before. Actually, it's on a YouTube channel on how to pick stocks for the longer term. Okay, so if you look on here, how to pick stocks for long-term investment. This one, yeah, you can take a look. I'll look at all the environment and everything. As of now, traders, what we can see from the indexes, it is planning to do a higher low, as I can see, it's stalling. Now, before we jump onto a buy onto Tesla, if you are looking for longer term investment, what I want to see, the critical level is if this low is taken out. If this low is not taken out, according to this framework, since you asked the question, I will answer this. If the low isn't taken out according to this framework and a higher low is established, that's when we can start to think about looking to buy into Tesla. Now, another thing also, I can tell you that on the weekly, even though the media is saying that, oh, Tesla, is going down, people are panicking, people are selling out. Look at this, right? According to this framework, it's still an uptrend phase one, right? The bottom just confirmed on the weekly. There's a high chance that there will be more move left on this, okay? So that's why a quantitative framework really helps. Some of you are asking me also on the questions that, where can I find out about the SMI? What is the best way to understand these stats and what is helping you basically, holding on to these trades and putting the trades in conviction? I would highly recommend you guys to take a look at 7steps to CTP.com, okay? And also then you can also play around with the SMI as well once you've watched the 7 videos. And those of you who have watched it, want to find out how to get the SMI and the VSA, just email us at clientservice@masterthemarkets.net. The team will be happy to help you. Okay, great traders. I guess that's pretty much that from my side. And our YouTube channel, next time we go live, you want to catch it, you can definitely subscribe to that. Hit the all bell icon. We'll be going live again tomorrow with Trade Guider on price and volume. And the other thing I just remembered, 4th of April, which is coming this Friday, me and Gavin are going to be in person at the Grand Connaught Rooms in London, in central London. So definitely come over, pop over and say hi. It'll be nice to meet you guys in person and have a real physical handshake. Traders, with that, I think we'll have a wrap up for today. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.